Video conferencing platform Zoom was one of the biggest winners of the past year and a half, with users around the world relying on its services throughout lockdowns. But with restrictions easing, investors are starting to sour on the platform. Zoom shares fell more than 3.5% overnight. That's after the company said growth in the coming months would continue slowing down as schools and offices reopen and people start traveling again for meetings and family gatherings. Profits in the 3 months to October rose 70% to $340 million. Revenues topped $1 billion, up 35% year on year. That's a steep drop from the same period in 2020, when sales were up more than 360%. Zoom says it wants to accelerate growth through acquisitions. That follows its failed takeover of cloud software provider Five9 for more than $14 billion. Now for more, let's go to Victoria Scholar. She's the head of investment at Interactive Investor in London. Welcome back to the program, Victoria. Now, better than expected results for Zoom, but how sustainable is this for a company that was one of the biggest winners of the pandemic? We're already seeing a slowdown in its growth.
Yeah, so shares in Zoom actually fell by more than 6% after hours, extending the decline in yesterday's session of 3%. And like you say, it reported better than expected results for the fiscal fourth quarter, both in terms of earnings and revenue, and also guidance as well. So on first glance, it looks like a good set of numbers, but investors were disappointed by the trajectory for growth. So to answer your question, it's the growth figures that are essentially not sustainable, because revenue at the start of the year was growing by 300%. Now it's down to 35%. So it's that slowdown that investors are concerned about, and the potential for a further move lower. So I think that Zoom has really recognized its need to diversify away from just video and audio communications, which is why it tried to acquire the cloud contact center software firm called Five9, which was for $14.7 billion. However, that deal actually fell through, but we could potentially see another deal sometime next year.
So we're seeing lockdowns being reimposed in parts of Europe. So the pandemic could still get a lot worse in some parts of the world. Can Zoom expect another spike in demand, and how significant could that be for the company?
Yeah, so I think the company's share price has clearly become very correlated with COVID cases, lockdowns, travel restrictions, which is why the stock gained more than 400% last year. It peaked actually around the time that the positive vaccine trial was announced last sort of October, November. And so Zoom, like you say, was essentially the market's poster child during the pandemic, the ultimate beneficiary of the stay-at-home trend. But I think that in terms of the sort of potential for lockdowns in the short term, yes, we could see a bit of a short-term boost for the shares, but what investors are more concerned about is Zoom's post-pandemic fate, because clearly the return to the office is weighing on demand. But on the flip side, there has been a persistent drop-off in executive travel and a permanent acceptance that working from home is going to be part of the new normal. So it's whether or not Zoom can continue to integrate into people's lives and not get sort of succumbed by competition, and also continue to diversify elsewhere.
Now, Zoom was a little-known company before the pandemic, but once the pandemic happened, once lockdowns were imposed, it really beat Skype, the more established player, at its own game. How was it able to do that, and has it maintained its competitive edge?
Yeah, well, I think that Skype suffered because it wasn't very reactive at the start of the pandemic, and Zoom continued to add very helpful features, and sort of it just started to grow. And then Skype dropped off, and then we saw Microsoft Teams come into the sector. So it feels as though Zoom really is leading the pack, but there is a significant chance that competition threat is one of the major potential headwinds to Zoom going forward if we see new players coming to the market. And like I said, if Zoom can't diversify beyond just video and audio.
All right. Victoria Scholar, Interactive Investor, Head of Investment, joining us from London. Thank you for the analysis as always.
Thank you.